Well, welcome everyone to today's webinar on Treasury Aggregators. This is Brian from Strategic Treasurer, and we're pleased you could join us as we analyze and discuss this section from the latest Treasury Technology Analyst report. Our speakers for today are Paul Galloway, Senior Director at Strategic Treasurer, and Craig Jeffery, Founder and Managing Partner of Strategic Treasurer. Welcome, Paul and Craig, and I'll now turn the presentation over to you.
Thanks, Brian. Glad to be here. Glad to see we got a lot of participants on to hear about Treasury Aggregators today. As we move to the next slide, we'll see what the agenda looks like, the topics of discussion. We're going to define what a Treasury Aggregator is and who are some likely candidates for utilizing a platform like a Treasury Aggregator. We'll also talk about opportunities, meaning, how can the system help companies do things better, more efficiently, automate, provide visibility, report. We'll also talk about emerging technologies that could or may have an impact on Treasury Aggregators. What are the relevant ones that are out there? How do they complement? How do they perhaps compete? Then we'll also talk about how you go through implementation, what a plan looks like to make any type of adoption of this technology smooth. As we move to the next slide, we are going to cover some of the basic or core functionalities of an aggregator. Think about, at its bare bones, an aggregator connects to banks. And so when we say aggregate, it collects data and information and pools it all together. And so you can think about information reporting, transactional data, getting acknowledgments, confirmations back from banks, making payments. So you connect to the banks, you utilize the platform for both those swim lanes, data, payments. It's also centralized in terms of connecting to systems such as an ERP, a TMS, or other networks within a company where you can perhaps do reconciliations, do analysis of the data with BI tools. It gets collected and disseminated into a data lake where you have a common center for source of truth, where other people can use that information. It also connects through various ways to banks. It can be through an SFTP, a host-to-host SFTP, or via APIs, or to networks such as Swift as an example. You also can consolidate your data. I kind of alluded to that earlier. So it pulls all the bank statements in detailed and summary form and aggregates this information together. So it's a centralized hub where you can get it versus going to your bank portals or receive them via perhaps email in some instances or in paper form. It also acts as a payment hub. And so this allows payments to be initiated within the TA system, or it can also originate payments from files that are received through systems, such as a TMS or an ERP or a payables platform. It'll take this information that it collects, and it will, in particular with payment files, for instance, it will put in the correct file format. So it'll reformat information that's coming in to go to a bank. It'll also do likewise information that's coming from a bank going into, let's say, your ERP or your TMS. It'll reformat the file and get it sent to whatever system it needs to go to, so it can be uploaded and accepted within the system. So these platforms do a really good job at that. They are designed for that. You can think of them, They're like a workhorse as an example versus having a Cadillac that has all the bells and whistles. It's more of a workhorse. They also can do some basic reporting. So if you have reporting needs, you can have visibility to cash. It can help you with cash positioning. They're quick, they're accurate, and then you can disseminate that reporting from the system to people within your organization that have a need to see that information. As we move to the next slide,
Yeah,
Craig,
just
did you have something you want to say?
I just wanted to jump in quickly because you had mentioned Payment Hub. We've given quite a few terms and definitions. So Payment Hub is part of an aggregator, that functionality. Some of you are familiar with the term Payment Hub or Payment Factory. Some people use those interchangeably. Some use Payment Factory, meaning the technology. That's the minority of people who use that. Payment Factory is a combination of the technology and a group like a shared service center or a center of excellence that will handle that. So we use the term Payment Hub to represent the technology. We use Payment Factory to include people like a shared service center and the other. So you just want to make sure that you can use your translator for the terms we're using on that. So thanks, Paul.
Yeah, great ad there, Craig. When we think about organizations that might have a need for a treasury aggregator, I'd like to start thinking about first, what are the complexities of payments? Is it high complexity? If it's low, probably not something that gets on the radar screen for a need. When we talk about complexity, it may be organizations that have global footprint. They have a wide variety of payment types. Perhaps they're engaged in foreign exchange. They make payments in foreign currencies, cross-border payments. There's a lot of factors that go into this complexity factor, but those tend to be the items that normally check the list. Another area we think about in terms of complexity is around accounts and structure. So I think about how many banks does the company have? How many accounts do they have? How complex is the organizational structure, legal entities that these accounts tie to? How are they transacting the movement of cash across legal entities, across countries, borders, the types of payments? How complex is that? Those two areas tend to be some of the core factors that go into, hey, you may need a treasury aggregator to help you automate and provide more visibility, make it easier to complete the transactions that you need to complete within a day. Other areas that make it difficult would be the connectivity. When you think about difficulty for organizations, maybe connecting banks or connecting banks to your systems to get information in, provide reconciliation, to be able to effectuate payables, transfers. That connectivity sometimes can be really complex. If you have lots of banks, you're connecting all these banks to your systems. When you go to replace, let's say, a system, maybe it's an ERP, maybe it's a TMS, maybe it's something else. When you make that replacement, you have to reconnect to all those banks that you had connected at that time. An aggregator can be a single connection versus multiple connections. So a lot of banks means a lot of connections. A treasury aggregator simplifies that. You don't have to worry about that piece connecting the banks, because it's a treasury aggregator, you're going to connect to your systems. So it makes it a lot easier. Security is also really high when it comes to utilizing a treasury aggregator. They have they have a lot of checks and balances. The connectivity is encrypted and secure. They also do a lot around the payment compliance It's OFAC checks, sanctioning, and make sure that not a file format that's an improper file format. They're going to get things into the right structure so that you can effectuate your transactions. They also help with the internal payment streams. And you think about a complex legal structure of a company where you have lots of legal entities and perhaps you're doing a lot of intercompany transactions. You're going across the globe. These platforms can help you effectuate those internal payment streams. They can also help with, your accounts payable, your other, it can also help with reconciliation. It can also help with the collections information as well. These complexities, you take them in totality, you think about smaller organizations, not a complex structure, not very many banks, not a lot of accounts. You can get away with manual processes in perhaps Excel, and you can manually manage that. But as these complexities start to grow, it gets to a point where organizations really outgrow that manual process. So if you continue with a manual process and you're complex, it can create bottlenecks. You don't have good visibility. It can create problems for decision making, or cause you to make poor decisions, perhaps because you're rushing to complete something, and these manual processes can result in errors. So going to a platform like a Treasury Aggregator can help you streamline these manual processes, automate it, increase the speed, provide more visibility, and reduce the chance of errors. Craig, I don't know if you had anything else you wanted to add before we go to our first poll question.
No, thanks for stepping through that. There's a lot to cover. We really have 3 slides that cover some aspects of that. So that brings us to our first poll question.
All right, first poll question is you select all that apply. So it's multiple choice. You're not going to be graded, but we will see the results. So our banking complexity situation is you issue payments out of 3 or more banks. You use 10 or more banks, have 100 or more bank accounts, make payments globally, work for a treasury tech provider, bank or consultancy, or NA or other. So I think these really, kind of cover the gamut of some of the items I talked about in the prior slide. What is your complexity? This will give us an idea for the folks that are on the line. How complex are their businesses? It really is a factor for moving away from manual processes to systems that can help them automate, provide that visibility, the security, and make things a lot easier on them. The results have come in. All right. We got quite a few, 40% are making payments globally. About another 40% are issuing payments out of 3 or more banks. So there's definitely some level of complexity with the folks on the webinar today. Coming in probably equally, about 1/4%, or 1/4 of all the responses, 25%. 10 or more banks are used, 100 or more bank accounts. That's definitely some complexity right there. And we have quite a few people that work for tech providers, a bank or a consultancy. I'm surprised at that number. That's pretty high, 25%. NA or other, about 20%. So there's definitely some complexity. If you're falling into those buckets where there's complexity, and you aren't currently using a Treasury Aggregator, it may be a a platform that you could utilize to help you eliminate manual processes and automate, provide visibility, reduce errors, and provide a lot of security as well.
Excellent. Thanks for going through that, Paul. And in the chat box, if you type the letters TA for Treasury Aggregator, or the word poll, if we get 100, let's say 107 people typing that in, Brian, I'll have to count those. We will send out the results of the polls with the deck that we have. So first, thanks for responding to this poll question. We have some more, and once we get through to the whole list, Brian will post something for following Strategic Treasurer on LinkedIn. I did, before we move to the next section, I did want to mention, so that we at least mention a couple times, some of the vendors that are in the report for Treasury Aggregator: Axletree, Deluxe, ECS Fin, G Treasury, Necto, and TIS. So really appreciate them being in the report and providing their details. And we'll share information about downloading that report for free for the users of that report. So that brings us to the second of three slides that get into the complexity factors. Paul started off about, the first portion of that. The second is, how do we go about simplifying the complexity? And I like to think of, why would you use a Treasury Aggregator? What are some of the complexifying factors, if you will? If you think about making a phone call, for example, you think of, I have one phone, maybe I have two phones if it's work and personal. But if you talk to a lot of people in a lot of different countries with different languages, and there's different messages, it might be nice to have one phone that just have all their numbers plugged in. It also might be nice if it did the translation for you into the different formats or the different languages. Sorry, I got back into the data side of things. And so Treasury Aggregator is that phone with a translator, allowing you to handle a lot of the conversations in multiple ways to get that done. So that's the overall factor. If you just have to talk to one person in one language, and it's your language, you can use two cans and a string, or you can just talk to them personally. If you have two, you still may run separate lines to, person one and person two. But as that grows, that gets a lot harder. You don't want to have, 42 phones where each of them has a person who operates the phone speaking the language of the other party. And so this is the idea of a simplifying the complexity. That's the concept. So what are some of the factors? Paula talked about some of those. When you have banks and accounts, the idea of collecting and consolidating the data, both the transaction level data, the details, as well as the balances, and not just from a prior day, but current day information for active accounts, is becoming more the de rigueur, the focus of organizations to see the activity, manage it for cash positioning, for fraud detection. And this is a key area. And so pulling that together in a variety of ways, especially if it's moving from, you got a host to host with a PAI format, you're connecting through a Swift Service Bureau for an MT940. Then you have some API connections you want to do. And those feed some of the underlying systems. Paul mentioned a few, like an ERP, a treasury management system, maybe an FP&A tool, a recon platform, an admin system. There's a number of back-end systems that would make sense. And so this is collecting and consolidating that data eliminates some of the changes that occur, especially if you're acquiring firms, you're acquiring companies on a regular basis. Paul also talked about some of the security. And, just to re-emphasize one of those factors, if I have better visibility and can monitor all my accounts, I'm in a better position than if I monitor some of them. It would be the same thing if you're talking to your accounting peers and they said, or you said to them, let's only reconcile some accounts. Let's not reconcile all of them. I don't know if there's a cost benefit to reconciling all the accounts. They will not believe you said that, and they will say, well, it's, principles of good accounting, generally accepted accounting principles. If there's reconciliation, whether it's done monthly, weekly, or daily, they would say this is a standard of doing business, and they're right. And so on the security side, having visibility is one aspect, being able to see things quickly, of providing security. The other factor that occurs regularly is if you have multiple payment platforms, you're connecting to, 6, 10, whatever number of bank portals, different approval process, setting up the rights, the user groups, the groups of companies, the groups of banks that someone can connect to, who can enter, who can approve, who can release, what the limits are. Well, every time you add a company, it gets increasingly complex. Every time you add a bank portal, you have to add people in those different environments. And so there's a different process. And anybody who's not a core user will have to learn and experience things differently. When you put those into a consolidated system like a Treasury Aggregator, now you can use that system for managing a consistent process across the different banks in your banking ecosystem. And Paul mentioned a number of other security features that tend to be embedded very heavily into the Treasury aggregators, and I'll leave his comments without covering the same ground. Paul also talked about payments on a couple of slides ago. There's different payment types, there's different formats. Some organizations are very intensive on payments. Non-bank financial institutions, insurance companies, they all have massive number of payments. Other organizations may not have nearly as many, and there are some other organizations that will have many, many different types of payments, some with a speed element, and some just because of the size of their reach, either to consumers or to other businesses. Intensity has a significant factor in what you may need, how you need to reach banks for primary payments, for backup payments. But on the messaging formats and the payment rails, there's a lot of change that's gone on of late. It used to be in the US, there was the wire transfer systems that you could connect to. There was the automated clearinghouse or the EFT network for low value payments, and not much else. And what we've seen in both the US and across most other developed countries and with their central banks is there are new payment rails, faster, more immediate payment types, new formats. The shift from the legacy formats has begun in earnest and is very far along in other areas. So using formats that are XML based for the files, delivering those with different connectivity methods such as host to host, loading it through a bank portal, delivering it through a network like Swift, using an API connection to then connect and pass the contents of a file, for example, are all areas where there's changes, and with changes come complexity. And if you have 4 systems making payments and you're changing payment formats to take advantage or to meet requirements of different central banks or payments, maybe you have to have specific address information in individual fields. Perhaps you need to do some additional compliance monitoring or payment types, payment codes that need to go in there. Now you have to change underlying systems. Maybe all 4 underlying systems have to be changed at once. Whereas once you start standardizing through an aggregator, if there's some changes, many of those, oftentimes you can handle that within the aggregator if you're pumping all the data over. Sometimes it's hard to make a change to the new format. You still may have to make a change to what format comes out of the underlying system, or you have a way of capturing that in the aggregator to send it along with the new information to meet the requirements. Compliance with both rules, regulations, and changing activities and protocols is something that absorbs the time of many organizations. Didn't seem like it was that long ago that most organizations, IT groups wanted to do all of that themselves. And then it quickly turned that they have way more requests for their time than they could possibly manage. And so meeting compliance requirements is a nice way to leverage an aggregator to handle those changes for you. Most of the other ones we've talked about and covered before, but the idea is there's complexity. There's a number of factors that are complex, and the more systems or formats, more changes you have, either brought about by rules or brought about by acquisitions, makes it harder. So how do we simplify the complexity? How do we move along from 50 phones with 50 people supporting it to a more centralized platform? Paul, I'm going to jump to calculating your complexity. Feel free to jump in if there's anything you wanted to add. How do you calculate the complexity? Is there a particularly useful complexity coefficient? I don't want to get overly oversubscribed here, overly detailed here on this. There's inputs and there's level of complexity. So on the right-hand side, you start off very simple, and very, very rapidly, you can scale to hypercomplexity, moving from moderate complexity to complex, highly complex to hypercomplex. How does that happen? Well, how many payment systems do you have? How many payment formats do you have? How many of those are changing? What banks are using and currencies? And then as you start to get into what data do you need coming back, or what data do you need to send, now you start to have a significant level of complexity that tends to compound. I'm in 6 countries. I've got 6, maybe I have 12 payment rails I'm using. Then I've got 14. How do I handle those? How do I reach and provide security to the endpoints? Maybe you're also concerned, maybe you sent payments. There's a very much a manual process to confirm the files got there, and you're doing confirmation in the more rudimentary way by, let's say, getting an email or looking things up on a bank portal. Well, maybe you want that integrated into a system so that the system's confirming file was received, it's acknowledged as received, it's accepted, it's processed, things have worked well. Or the file wasn't received, you get a negative acknowledgement about that. And then you correct it, or you get a confirmation that you get notification that there's a particular problem, so you can solve those. And those are significant factors, important factors for organizations and for you if you're involved in payments, to make sure you have a strategy and plan to address that complexity. In your personal life, it's like, well, I'm going to solve the complexity of talking to a lot of people by getting a phone rather than driving everywhere. Maybe I need an application that'll do the conversion for me. So too, that type of simplification needs to occur for different organizations. And that doesn't mean that everyone has the same level of complexity or level of needs, right? I don't need a translator from just talking to my neighbor over the fence. I might need that if I'm talking 12 different languages and I only know 1 or 2. So those are some of the factors about calculating your complexity. How is it? What's the level you are at now? And what's changing? Is it slowly becoming more complex? Is it rapidly becoming more complex? If you're in an organization that is changing rapidly, that. And so that drives you to more of these solutions that reduce the complexity. Paul, I felt I said a lot of words, and we use 3 slides to cover complexity. I think we've got that covered. And so a lot of you are thinking, let's go easy on that. Let's do another poll question. This is a single choice, select only one. And you have to select one. We don't have a I don't know or not applicable on this particular one. So in the near future, the next 12 to 24 months, 1 to 2 years, I expect the following to be true of the regulatory environment. From high, large increase in regulations, and increase approximately the same level, decrease regulations, and large decrease in regulations. and regulatory relief, particularly around when you think about payments, banking, security. So think about this. Put what your best guess is. All right, the answers are in. This is a select one. So the top vote getter was an increase in regulations. I think that's pretty safe. Regulations, even when people try to cut regulations heavily, there tends to be an increase in every country, in every jurisdiction, every group. It seems to be pretty common. So 28%, a large increase in regulations, 9, that gets us to 37%, and approximately the same 23%. So that brings us right around 60% with rounding. Decrease regulations, we've got 39% in total, a large decrease in regulations, regulatory relief at 8%. That's probably the most, I don't want to say positive about decreased regulations, but the most exuberant about a decrease in regulations that I've seen in a poll. Whether that's going to be on payments, whether that's going to be other places, I think that remains to be seen. But that's a pretty good fit, right? The middle's at 23%, a little bit higher on increase and decrease, 28 and 31. So 39, believe there's a decrease, 37 an increase. So slightly skewed towards a decrease, fairly well balanced, a little bit dip in the middle. So really interesting. Thank you for taking the poll and answering that.
Yeah, I was a little bit surprised by our participants' responses, because the last poll that we've done on this, a little bit broader poll that have been done, shows that it tends to be more people that believe in an increase in regulation or to remain at the same level. So definitely skewed to increase or to remain the same versus what we saw, more kind of even distribution in our poll for the people participating. So this is what we tend to see. So what does that mean? Near-term expectations. So we don't see that Treasury's regulatory burden is really going to be diminishing, and there's kind of several factors that go into that. Before I jump into those, just think about how technology can help you leverage ways to reduce staff time that's spent on compliance for these regulations. So kind of 3 key areas. One is technical requirements. So we can think about PCI DSS or NACHA. And so whether we're talking about data requirements or payment security, both those are factors in terms of companies have to maintain compliance for PCI DSS. And for security of payments, NACHA has very specific requirements in their payment files. You have to adhere to those. You can't deviate from that. You have to do that. When it comes to PCI DSS, if the company has to do the full boat, it can be quite onerous. So systems can help you with those particular areas. Another area is visibility and reporting. A Treasury aggregator can help you compile the data. It can also help you with signatories and FBAR reporting. Another area that's coming up that isn't in effect, but it's coming, it was supposed to be, there was a temporary push to move this out, is the beneficial ownership information. It's a new regulation that had come out. There is compliance with reporting on that. That's another area where you could see some benefit. So the third area is around sanction screening. I talked about sanction screening before. A lot of Treasury aggregators, they do this screening. So they have the list, the OFAC checks will be completed. And when you think about compliance for that, there have been instances where regulators have held companies responsible for negligence in sanction screening. So it's really important that you make sure that these payments are being screened. You don't want something going somewhere to a terrorist or somebody else on the list where you don't want funds going to. So it's important that you have some way to do that screening. A treasury aggregator can help you with that. And TAs will screen all payments and it will be done automatically. They'll run it through the systems. It'll be part of the process that they go through before payments are sent to the banks. Craig, I don't know if you have anything else you wanted to say on this slide before we move on.
Yeah, I think what I wanted to comment on was how things have changed. I believe the Treasury Perspective Survey was completed about 9 or 10 months ago, and you can see it's the same type of questions, right? Increase in regulations, approximately the same level. That was 90% were more regulations less than a year ago, and now I think we had over 300 of those that are attending voted and did answer this poll question. And it was not only very much balanced between increase and decrease, there's a little edge to a decrease in regulations. And I think the so approximately the same. And increase and large increase was, I have that wrong. Increase and large increase was 58%. Approximately the same level of regulations, 38%. That was 23%, approximately the same. And decreased regulations here a year ago, less than a year ago, was about 1%, whereas that was the most significant group. A plurality of people on this webinar believe it's decreased. So that's a massive shift. So when we look at data and research and what's occurring, we look at, is there a regular trend? Is it small? Is it spiking? Is it declining? And this is what's kind of interesting here is that this has shifted a lot. And it's not quite a barbell or a dumbbell where there's a lot of increase in regulations, a lot of decrease, and a very, very thin amount of similar. But it is more like it's more balanced across that span. I know there's some questions in the box, in the chat box about do we think regulations will be increased in North America around sanctions? Now that the current administration in the U.S. is pushing for Mexican cartels to be labeled as a terrorist organization. I think there's a whole number of things around that. So, will regulations increase? Certain, is that an increase in regulation or is that more people put on a terror list? You're still having to look and scan for them? Or is there a real shift in the view that the new administration is going to be much more light regulatory? So every new regulation will have 2 or 3 regulations that fall off. Will that be generally, or will that be in banking and payments? I think those are some of the questions. So, yeah, that's a really significant shift. I would say I would expect to see some. That caught me by surprise by the magnitude, and noteworthy. But all of you think so.
Yeah, I think just from my perspective, thinking about our prior poll and the new administration coming in, I think the shift kind of makes sense if you think about the Trump administration's standpoint on less regulation versus more regulation. That would tend to support why we saw more of a even distribution, perhaps towards the middle, versus this one is certainly this poll. These results we're showing here is definitely skewed. So, yeah, that was definitely interesting responses. So moving on to the next slide, what are some emerging technologies that could impact or are impacting treasury aggregators today? One area in particular is faster payments, enriched data. So FedNow came out not too long ago. FedNow came out, so now banks all across the U.S. can initiate faster payments, same-day payments, instant, through the FedNow platform. We're seeing that there is a pickup in the adoption. It's not like rapid, but there's more people picking up doing faster payments. With faster payments, a Treasury Aggregator can help manage that. Faster payments, better payments. It provides the security features as an added benefit. So it can help manage these needs when organizations are moving to faster payments. And when we think about rich data, most payment innovations offer increased speed, such as payments, but they also enrich data, or you can have both. It can be one or the other, or it can provide both. So a lot of the innovations that we've been seeing are doing one or the other as they come along. Another area is APIs. In particular with APIs, we've seen a significant uptick. We're seeing not only that organizations are requesting that connections be done completed by APIs, perhaps they're doing it already internally on their own, but the vendors that are providing, service, a Treasury Aggregator, a TMS, or otherwise, are starting to use APIs to make these connections. And so we think that that's going to continue to increase as banks that are not tier 1 banks, perhaps tier 2 or lower, start developing their own stables of APIs. So it will start to become more broader. It's becoming more widely accepted. So when it comes to a Treasury Aggregator, we believe that the levels of complexity will be a factor in decisioning around using a TA or just relying on APIs, because APIs alone aren't going to be enough. But Treasury Aggregator can really manage that quite well. Doesn't mean you can't use APIs for connectivity, you can. But the Treasury Aggregator will provide the functionality that you need, the modules. And it has a lot more flexibility. Another area is around networks. So networks, TAs leverage various payment networks. It enhances flexibility and reach. We talked about Swift network before. Swift network connecting to that is pretty fast. It's pretty efficient. It's not super expensive. You can get your information reporting. You can effectuate payments. So a Treasury Aggregator can be a great tool to leverage connection to networks. Another area is AI anomaly detection. This is becoming, as people know, especially over the last 12 months, artificial intelligence has become a really big thing. Great thing about AI anomaly detection is that it's really good at doing that. It can find where there are payment flows that deviate from the norm. It uses history. It uses patterns to detect when something seems to be fraud. If fraud happens and you utilize AI anomaly detection, being faster at detecting fraud is really important to ensuring that you don't suffer a financial loss, or at least being able to address it sooner will help mitigate the risk of losing money in the case of a fraudster. We do see that the increase in use with payment systems. We see it with aggregators, TMS. So AI is becoming a more important component. I think it's complementary in the sense of what AI is able to do. When we think about data management, data strategy is increasing in value within companies. There's more demands on treasury teams to provide information and data. A treasury aggregator can feed BI tools, machine learning tools that corporations utilize, perhaps their data lake, where data is utilized and extracted and reformatted into reporting and analysis, can help with decision making. Another area is capabilities, around capabilities. The lines are blurring, so we're seeing crossover with technologies, whether it's microservices, platform as a service, APIs. overall the broader platform of cloud native technology, the innovations are starting to blur the line, so it's becoming harder to differentiate these platforms from one another as they continue to advance. What we do see is with these capabilities, their enhancements, provides, it speeds up the development, which is important in this area. It also enhances the modularity or the functionality that you have. You can customize it. You can select what you want to utilize. So these technologies are, I think, a good thing for organizations that want to get perhaps something that is more of a cafeteria style platform. Doesn't mean that treasury aggregators don't have a place within this area. We absolutely think they do. And with that, Craig, I just want to find out if you have anything else you wanted to add before we go to our third and final poll question of the webinar.
No, you mentioned data lakes. I was hoping you would say data blobs as well, which are almost the same thing, but that was just a personal thing that I'm only supposed to think and not say. But that brings us to our final poll question. We made it to the final poll question. We still have more content.
We made it. This one is going to be a single choice. You have to select one. It does have a I don't know, so you can select I don't know. What do you view as the most important requirement for treasury aggregators in the next year? Is it service as part of an existing solution, network, size or number of pre-established connections, new technology support such as API, service and interoperability with all systems, reconciliation, ERP, TMS, admin systems, enriched services for information reporting, confirmation, error detection, recovery, enriched services for payment security, validation, confirmation, sanction screening, fraud detection, or the last one, I don't know. This is kind of hard. This is, there's a lot of good aspects here to consider. I'm not sure exactly how I would answer that if I was a practitioner today.
Well, we like to make our polling questions challenging for people. Keep responding and then hit submit. For those that have already done so, go ahead and recognize that we don't need to put any more items in the chat box for TA or anything else. We have enough. So Brian has let us know that that's the case.
Here's the results.
Your top point on this, Paul.
Yeah, top point. I mean, when we think about service, interoperability, I think the connection to reconciliation, ERP, TMS, AMS systems is being the top one that was selected here. That makes sense. You see APIs is coming on strong now. We're seeing that with a lot of our clients use APIs. So I think those two is the top dogs in there. Close behind would be the enriched services. So I think those areas make sense to me. There's certainly, for me, was kind of hard to choose between. So people did a nice job. It's kind of distributed here. Not completely evenly, but it is distributed.
Well done. Thanks, everyone. Yeah, so I did get a question, and we read them, whether they come in through the chat box or they come in through the Q&A or sent only to hosts and panelists. The question was, can you define data lake versus data warehouse? And it says signed data blob, which is I'll try to give a 1-minute definition. They're all methods of storing data. And for most people on this call, they will all be sufficient for that. A data warehouse is an area that's fairly organized where you put the data. Usually is pre-positioned with totals for faster reporting. A little bit older style method of doing it when computing power wasn't so amazing as it is today. But they exist and they work well. A data lake and a data blob are very similar. They'll reside on, Azure, Amazon Web Services. A data lake tends to be used for a massive amount of information for running your business intelligence tools on. It contains, it's categorized a different way. Think of it as a very large room with file cabinets, file drawers, and folders for storing data in an organized way and then querying that. A blob, I shouldn't have said data blob, I just call it a blob, binary large object database, is like those giant boxes you put in your garage that have the Christmas decorations, baseball, rollerblade stuff that you're never going to use, and they're just on shelves. It's much more handled that way. Both of them store structured, semi-structured, and unstructured data. If you have hundreds of millions of records, make sure you go to a data lake. If you have less, either one will work well. There's also a question between the main difference between a treasury management system and a treasury aggregator is a treasury aggregator is focused on information in, payments out, and handling that across multiple systems. A treasury management system may have treasury aggregator capabilities, but they're focused on what is my cash flow, my forecast, my debt, investments, may have risk elements as well. So there's an element of visibility that occurs too. And so I invite you to look at the report to see more of that description. Those are great questions, and thank you. So what are some of the requirements moving forward? And this was taken from a webinar poll. And what's pretty interesting, if you look at the top 3 things, what do you view as the most important requirement for treasury aggregators in the next year? So what do they need to develop? If it's the phone system and the translator system for information and payments, supporting new technology like APIs, enrich services for payment like validation, confirmation, some of the other compliance things like sanction screening, fraud detection, highly identified, and then services interoperable. It works well with our other internal systems like a recon platform, ERP, a TMS, etc. Now, this is a question where the answer, you can pick one. And so it was very evenly spread out. Almost 75% selected one of those 3. Pretty big drop off to others, right? To select only one. That's one method of asking questions. So you had a force to choose one. Those are all extremely important and useful to know that people are looking for. I need to connect well with new things. I need new services and data that helps me run, and it needs to play well across the ecosystem. So all core aspects of why you would use a treasury aggregator, it needs to adapt to the new changes. So couple key things there. And as we draw close to the end, we're making it to the end. What do we think about implementation? What are some final thoughts on implementing? So a few things, as you go through implementing, what needs to occur is like, what do you go through the process? What do I need to connect? Who do I need to connect to externally? What banks, what data sources? How about internally? Who needs to consume that data? What's the best way of doing that? And what's the impact? And so you can prioritize or triage what you're trying to do. And this is part of the whole conceptual data stack, technology stack, data, connectivity, systems, and reporting analytics. All those have to be rethought if you haven't done that in the last 4 years, because technology has changed. So the internal and external integrations are how you realize efficiency, better visibility, improved forecasting, and so forth. We put training on the bottom here as one of the items to think about. And many of you are thinking, what about testing? And yes, we would embed testing with both your internal and external integrations. You have to test the connections, make sure they work on the happy path as well as the defect path, make sure they work. I think most of this audience is well attuned to that. That's why we said training. Training is, access to the systems, learning to troubleshoot, instead of making it a black box. If you have a gateway, an API gateway, you do streaming inside your organization, which is a faster way of connecting, or it's file-based. But making sure you can connect, and there's training, people know how to use it, know how to troubleshoot, and that you can expand as the next level of complexity comes on in terms of a new bank, new payment format, a new platform, a change to an underlying ERP system. So that is our final thoughts and implementation slide about what to do. The other piece that is important is to download the report. Pull up the technology analyst report, look at the section on Treasury Aggregators. You can download it. You can download it for free. Just take some data and connection to pump the file to your computer. Highlighted Treasury Aggregator providers, those that were in the report, this year's report, is Axletree, Deluxe, ECS Fin, G Treasury, Necto, and TIS. So we thank each of them for being part of that. Encourage you to hit them up, ask them for demos, and look for information. And certainly download the report and see what questions you have, which ones are answered, which ones remain. If you have questions that we can help you with as a consulting firm, in addition to an analyst firm, we're happy and love helping people to connect to all their banks, all of their systems for a secure and efficient treasury. So thank you so much, Paul. Thank you, everyone, for joining us this afternoon. And I want to make sure we give Brian Weeks a few moments. He has some very important announcements before you go to your next call.
Well, thank you, Craig. Thank you, Paul. And thank you, everyone, for joining us today. The CTP credits, today's webinar slides, and a recording of today's webinar will be sent to you within 5 business days. Be sure to download, as Craig mentioned, the Treasury Tech Analyst report. And be sure to register for the next webinar in this series on supply chain finance, the cash conversion cycle, and the Treasury ecosystem. The links to both can be found in the chat box. Thank you, and we hope you have a good rest of the day.